Welcome. This is going to be a presentation for the Capstone class for Ottawa University. My name is Tiny Muehlmeyer, and we're going to be talking about General Motors. So we're going to kick things off and get started. So a little basic history about General Motors is they were started by William Durant in the late a car company. He started a horse-drawn carriage company, and he had amount of success and was looking to expand and managed to get his hands on Chevrolet. And after a little bit of success seeing that, it caught the eye of the legendary banker JP Morgan, who wanted to merge Ford Motor Company, General Motors, and who was Chevrolet at the time, and a couple other smaller brands together to make one giant conglomerate. Well, what ended up happening was the deal fell through, and Durant pretty much General Motors, but ended up losing it in the process thanks to World War I. Right after the end of World War I, a major milestone for General Motors was General Motors Acceptance Corporation, which is GM Financial. And that would later spur on, almost 100 years later, to the crisis of 2008. Nothing of notable interest happened during that time. And obviously, during the financial crisis, General Motors declared bankruptcy. They had almost $30 billion in debt that they could not manage, and it was bad debt and a lot of different reasons, and they had to receive a government bailout. So some challenges that are facing GM in the current political sphere is the Great Big Beautiful Bill, which was introduced by President Donald Trump, and this stripped the EPA and stripped any electric vehicle initiatives. Very difficult to get tax credits. So it kind of neutered any momentum that EVs had. And on top of that, General Motors is facing an immense amount of political changes. And if you look since 2016, we've had three presidential terms, two of the same person. And during that time, we've had wars and we've had major political scandals and a virus, a worldwide pandemic that absolutely toppled the landscape. So there's just an immense amount of pressure on General Motors from the political sphere. Some other major challenges is the American consumer. So with the pandemic, we saw an immense amount of inflation over the last couple of years and the reduction of purchasing power. And the other significant boom has been AI, and there's been a movement to return American manufacturing jobs to the United States. And General Motors is the was the largest producer in 2025, and states outside of Bowling Green, Kentucky. Everything is either manufactured in Mexico or Canada, and that is not a look and a So just some quick financial overview of General Motors, and then we're going to get to a SWOT analysis and then a recommendation of what they should do going forward. So General Motors has very strong financial numbers. They have a quick ratio of 1.10, a current ratio of 1.17, and those tell us how fast they could sell off debts to pay back, or how fast they could sell off any assets to pay back any debts. Strong numbers, strong price to earnings. Return on equity is extremely strong, and the profit margins are just continuing to go up. And I bring up profit margins because most other manufacturers are in the low 5s to upper 4s, and they almost have 2% higher, and that is substantially higher. And a lot of that is due to the trades with Mexico and leveraging free trade agreements and manufacturing in cheaper areas. So going to get into a little bit of a SWOT analysis. So one of GM's biggest strength is the brand recognition, especially in the North American market. They have, as I mentioned before, they also have the strongest product offering with internal combustion engines, aka ICE. And they also have strong profit margins and strong ratios. And they are expanding their product portfolio to include hybrid, plug-in hybrids, and even continuing their electric vehicle platform called Ultimatum. So weakness is they did have a very recent major recall with the L87 V8. It affected somewhere north of over 100,000 different vehicles, and it was very public. And these can be very demoralizing to the public, especially in a time when things are so expensive. Not having cars function the way that they are supposed to can absolutely tank any momentum. So as I mentioned on the previous slide, strength is they are introducing new product offerings. The problem is that's not coming out until 2027, and there has been no introduction of any of that. So there is a solid chance that that does not get introduced in 2027, and that would be very detrimental. Manufacturing is also not done in the United States. So any tariff introductions like President Donald Trump introduced in 2025 really had an impact on General Motors, derail their business model. The other problem with General Motors is that they are super reliant on the North American market. They do not sell any other vehicles basically outside of the North American market. So if any reason this market, the North American market, fell apart, it would be massively problematic. And as I mentioned, massive tariff exposure and then past mistakes still loom from 2008. Some major opportunities. The North American market is expected to expand almost 5 times its current size, which is about $3 trillion, all the way up to $15 trillion in expected sales. So there's an immense amount of opportunity potentially if things go the way that they are. And for all accounts and purposes, that seems to be heading in that direction. They are also expanding into new markets with a new product line that will help get into some missed opportunities with buyers that were looking for an American-made vehicle or an American-manufactured vehicle and did not want to go to the Japanese. They also have one of the largest increased demands for SUVs and trucks and are one of the most competitive offerings out there. And there are new trade agreements coming out potentially with the Trump administration. We shall see what happens. But for right now, that seems to be moving in the correct direction. And I put the Corvette on the bottom, but the Corvette is more important than people realize because General Motors is using one of their subsidiaries, Cadillac, to expand into Formula One, to expand its global image, which could include expanding overseas depending on how Formula One goes. Threats, political uncertainty. As mentioned before, President Donald Trump is all over the place. It makes it very difficult to predict where things are going to go. And even in the last couple of years, President Joe Biden was trying to push internal combustion engine sales, new car sales by 2030, and President Trump got elected and that got revoked. Makes it very difficult to do long-term planning when we cannot determine what's going to happen, who's going to do what and when. Economic uncertainty, as mentioned above. Another major issue is supply chain vulnerabilities. This was really a problem during COVID where they could not get microchips for certain vehicles. So a lot of vehicles had to be rolled off the production line without those certain components working correctly. Also, competition is brutal. The automotive industry is one of the most competitive markets out there. And without strong product offerings, GM will lose the battle. So suggested strategies is moving manufacturing back to the United States, wait and see how the cultural and political landscape shake out, and then find new emerging markets to enter. So the decision strategy is to mix all three and move manufacturing back to the United States, which General Motors is doing for 2027. They are moving to the Fairfax County plant and bringing it back online to manufacture the Equinox, which the Equinox sales in 2025 was roughly about 30% of their sales. So General Motors could see 30% of its manufacturing workforce brought back to the United States. They also should wait and see, and that is also what they are doing. They are not moving any of the manufacturing out of Mexico and Canada. The Equinox was being manufactured in China, and that got moved to the city. They also should search out for new opportunities. And one of the suggested offerings is to move to India. This is an untapped market, and they're looking for relatively affordable vehicles with tons of cargo capacity that can navigate small areas. And the Equinox, ironically enough, would be perfect for this situation. And this would allow them to double dip in the Equinox plant and expand it a little bit more and bring even more manufacturing jobs to the United States and allow them to really push that and market that and make that known. So yeah, so this is the decision based on what the team had thought. We thank you so much for your time. Have a great day.